Hi, I'm Tim Hungerford. Recently I did a webinar on remotely managing fraud during a crisis. I hope you'll enjoy it. And now we'll dive into a few tools, some data cues, and some online interview cues before we get into Q&A. So under data cues, this is the time when you need to leverage your data analysis and continuous monitoring capabilities. So let's dive into data analysis first. Just a couple of tips and some key tactics I like to do. You've got to really drill down creatively into the data that you've got. Programs like Tableau are really excellent for doing this, but others, ACL, IDEA, they all have some sort of ability for you to do this depending what an experienced user you are related to that. But you want to vary that and be creative by product, by geography, by customer, by vendor, by sales rep, and then multiple versions of that, and try to see if you can find that abnormal, that outlier percentage or dollar value or something that you're not expecting. And in finding outliers, I use something called relative size factors. And relative size factors really are about taking a group that I've narrowed down, taking the average amount or quantity or activity, and then taking the maximum and divide it by that average. I order things by that result or that relative size factor, and the things with the items with the largest number are usually the outliers that usually have some sort of problem, or there's been some control overwritten, or something's happened there that requires an explanation that helps me identify if there are other issues there. The other thing too I like to use is indexes when I'm doing this, because you look at a percentage like this change from 2016 to 2017 is only a 6.25%, and then it went 11.76%. Those numbers may not seem material as you're browsing and scanning it, but if you do an index of the percentages over each other, you get 1.88 or 188%. And I find anything that gets close to 2 or 200% usually has some sort of issue related to it. I wanted to talk briefly about Luckin Coffee when we do data analysis. And if you've heard about Luckin Coffee, there are recent revenue recognition fraud that's occurred. Over $300 million of over reported revenues. Now, 300 million? Well, if you look at their third quarter of 2019, they only had $215 million of sales. These are publicly traded with a symbol LK. Well, maybe not for longer. They've just been given the delisting notice. But if you do the data analysis on that, you would have seen that if you just took the average items that customers would buy, they were normally around 3 or 4 items, but as they got into the revenue recognition overstatement, they got closer to 5 items per customer. But the big thing was the average customer per store. If you just look at the basis, it's around that high 1800, 2000 level. All of a sudden in September of 2019, it jumped up to 2500 per store. So new stores open, but the old stores were part of that average too. So there's no way that significant 26% increase could have occurred. And it's just too large. And if you look at the percentage, they had a 540% increase in revenue. Just doing some basic data analysis, we might have been able to identify that sooner. So some of the trend analysis you might want to do, some tools, look at your pre-factor data, and now look at data using periods, months, and weeks. See how your gross margin is. Should be similar even in crisis periods. Add up all your discounts, returns, and allowances. Divide them by sales. See how they compare to pre-crisis. That could be some other issue related to sales or sales reps. Percentage of change in sales divided by the percentage of change in receivables. They should have some similar correlation to pre-crisis numbers. And also look at your bank deposits divided by your sales, because there should be, again, a correlation in the past. You might have some cash issues. Shrinkage ratio. How's your inventory compared to the ending inventory? Is the write-offs increasing? Do you have a potential inventory misappropriation? Rebate amounts or discounts by sales, by customer could identify some potential kickbacks. The average payroll amount per employee, grouping of employees, you could do that too, certain areas, and group those employees. What's the average payroll per employee pre-crisis, post, during crisis? So look for any unexpected rolls there. And finally, again, expense reimbursements should be little or no travel during COVID-19. So review those and then make sure any employee reimbursements of significant or through those thresholds are authenticated.